Thanks so much, guys, for joining me. So, I guess the best place to start is, we have the bear market backdrop behind us. You, Matt, you know, through your capacity as at Bloq, investing or advising rather, tons of companies across the space, from Circle to Fidelity. What are companies thinking, and how are they getting through this market? And what's your experience been like?
So welcome to the crypto winter in many ways. I think people really look at the price and kind of modulate how they interact with this space. These are the best times to build, to hire, to invest. If I could go back in time in the last 3 bear markets in crypto, that's what I wish I did more of in terms of regret analysis. And so today, you look at the price, we're 130 billion-ish in market value. And while the kind of overcurrent is crypto winter, the undercurrent is actually really interesting. You have folks like Fidelity building custody and trading Bakkt, which is New York Stock Exchange, ICE's platform for much the same. And then every week or two, you see relatively large financing still happening in this crazy market. And so all the building and the undercurrent of what's happening now, and it's kind of nice to have a break from the mania of the last year and a half, when everybody was just talking about price. And so building and kind of taking a breath is a great thing. And I could definitely see crypto spring around the corner.
Manmeet, what about you? You're investing in companies that can support Cardano in a sense.
Yep.
The market cap of Cardano is down from 24 billion at the height, at the mania, now down to 1 billion. Is it tougher to find the right entrepreneurs, the right companies to invest in, or has that not changed that much?
In all honesty, I think it's a lot easier, because now all the ones who were getting into the blockchain space merely for a cash grab are now weeded out, right? We're back to actually looking at investment from a fundamentals perspective. So you're looking not at, all right, when Moon, when Lambo, when Bittrex, or whatever it is. You're actually looking and saying, hey, what's the problem you're solving? What's the major opportunity there? What's your solution set? Who's the team? What's the tech behind it? You're going back to actually looking at the viability of a business, its scalability, and so on, and then taking those kinds of investment decisions, right? So it's forced, at least at the startup stage, it's forced these early stage entrepreneurs to seriously consider about building a business of value that's solving a genuine mega problem, as opposed to a trading opportunity. Sell tokens, list, flip, right? That narrative is gone. And at the same time, the other element that I think has made it a little conceptually easier to invest is the fact that now we're not talking about utility token investment. We're actually talking about something that's linked to the economics of the business model, be it equity, be it some other metric that you play with. And that more closely aligns investors with the founders, which is what that stage of investment should be about.
From my vantage point, as a reporter, I remember 2017 getting pitches, this ICO is going to change the world. Then it was this utility token is going to change the world. Then it became, all right, it's not a utility token, we're doing an STO. And STOs come with, security tokens, have their own set of promises to the market. Do you see the value in them? Are they going to have impact? We'll start with you, Matt.
Yeah, I think you qualified it right. Utility tokens are kind of in the rearview mirror, so to speak, albeit lots of great teams are building great projects in that genre of tokenization. And I would say the biggest part of me, all of me, got into this space to build those types of networks where you align shareholders and users and participants in a particular network. It was easy to raise money. Those teams are developing out those platforms, and then the go-to-market piece of that is still to be determined. And so those are the net new trillion-dollar networks. And then I agree with what Manmeet said. STOs is now kind of in full, I would say, bloom. People are trying to figure out the regulatory shape, the tokenization shape, the exchange piece. And but honestly, I didn't get into this space to tokenize hotels and bars of gold and cap tables, but it's super important for our space to do exactly that. I think institutions don't understand distributed compute or distributed storage or all these new Web3 networks, but they understand how to tokenize, fractionalize a shopping center, get ownership, get better price discovery, take out friction, and all the attributes that come out of tokenizing real-world assets. So I think the overcurrent will be super positive and good for the tokenization economy that's ahead of us. And then with that, we'll build new wallets, new exchanges, new custody, and kind of the undercurrent of those utility tokens that are in the rearview mirror will come back into focus.
Mm-hmm. But I mean, do issuers care? Do they see the value in tokenizing as an example? You know, there are 10 restaurants in New York City, because you got to convince the entrepreneur that there's a value there too, not just investors.
There is going to be a chicken and the egg. I'd love to hear Manmeet's thoughts on this, but I think today, you know, again, good teams, good projects will get funding. They'll pick a token standard. There's a lot of competition on which standard or which platform to use. I think over time it'll probably change 3 or 5 different times until that one standard or some of the centers of gravity develop. And then the hardest thing to see right now is these STO exchanges. So you have T0, Open Finance Network, well capitalized, a great compass in terms of doing that. But how do you get institutions around there, right? And create the liquidity that will make that restaurant or Bloq or any other company that does an STO and create that liquidity and that premium, because price discovery and all that stuff.
Mm-hmm. Yeah, no, look, I agree with that entirely. The issue right now is that STOs are considered sort of an easier mode for financing, right? And it's aligning to a large extent the interests of investors and the founders. So we're moving on that path. Now, to the point that you can actually do an initial issuance, that's not the problem. But that secondary market trading, the regulations that allow for that to happen, and which jurisdictions, right? I'm based in Asia. My entire experience and a lot of my work is Asia-based. You actually see pretty much a lot more traction happening there in terms of maturity of understanding of blockchain as distinct from cryptocurrency trading, early stage startups adopting blockchain as an integral technological component of their business, established businesses, whether they're large scale companies or mid-sized companies, genuinely, again, looking at blockchain for cost efficiencies, process efficiencies, whatever have you. So they're all looking to use the technology, and they understand the value of leveraging that to raise funding using a method that we anticipate and we're trying to construct in a manner that is more efficient, less intermediaries, yet meets regulatory requirements, right? So once that piece that meets regulatory requirements plus a regulator or a regulatory regime that is open to playing along to experiment with this, to allow some innovation to happen in this. Once you have that, and maybe that'll be in the US, I don't know, but I do know there's
things are heating up in Asia.
Very, very.
Now, is that because of regulations? That do the regulators in places like Hong Kong, Japan, Korea, have they been able to wrap their minds around this space better than the folks here in DC?
Well, I can't make a comparison, but I can tell you that the regulators in Japan, in Singapore, in Hong Kong, and the entire ecosystem that we have there, of the investors, of the companies, right, of the technology protocol providers, is very, very advanced there. When we have discussions about blockchain in Asia, we talk about, to a large extent, we're talking about details of various protocols and various business models, and we're getting to that level of discussion as opposed to, let me tell you what blockchain is all about, right? So here's consensus.
So what's the reason, though? Why do you think?
Well, I think, to be honest, Asia has been the hub of innovation for the last 20-odd years. If you look at China as a genuine innovation center, and you look at the innovation that's coming out of places like India, and then Southeast Asia, be it Malaysia or Indonesia, and then Singapore as a hub for technology companies across Asia to, build their ecosystem out of, it's just a very dynamic environment that's multicultural. It has all sorts of growing demographics, right? It has a super growing middle class that's got tremendous spending power, right? And you have a lot of variances in the ecosystem that allow for businesses to generally test different environments in a very diverse manner. That just makes more powerful, more nimble, more agile companies that can take that innovation and bring it to more homogeneous environments, let's say, right?
The companies that you work with, do they cite sort of regulatory issues or uncertainty as a impediment to executing the business?
Absolutely. So our clients that are public regulated financial institutions think about this a lot differently. And what we do through Bloq and Bloq Enterprise is what we build connective tissue to tokenized networks, which means not just generic blockchain, but creating the fabric, whether it's wallets, nodes, APIs, data analytics, to help companies engage in these tokenized networks. So public, Ethereum, Bitcoin, et cetera, or creating their own cryptocurrency or token for a particular network. And so that's where we reside, but they're all very conscious of regulatory dynamics, as they should. And that's a smaller group of Fortune 500 companies that are engaging in that way. But that's where the value is in our mind, and that's why we're playing in that part of the equation. And I agree with what Manmeet said about China, and China has had some natural kind of advantages because most of the mining and trading historically has been all in China. And I think that crescendo of kind of psychology and advantage has really propelled China. And then when China did a crypto ban, a lot of that innovation spilled out to Japan, Korea, Singapore, Hong Kong. And I think fundamentally what's happening, we see this in Singapore and in Switzerland, where teams here in the U.S. will forklift and move. And in tech, if you're around tech long enough, you see that, and you have regulatory issues. FinTech historically has just been a tough space to play in because you had regulatory capital, licensing, all these different things that, from a venture standpoint, you had a lot of weird or dead capital that you had to invest to make that business go. Here, teams are literally saying, if I could get financing in Switzerland or Singapore, I'm out. And they are moving in droves that way. And so what's happening globally right now is it's competition. It's regulatory arbitrage. And you even have whippersnapper countries like Malta and Liechtenstein and all these other ones trying to play in that game. And what the game is here, it's new money layers. These are trillion-dollar networks. And so the dynamic of Wall Street, Silicon Valley, these historically strong on a heat map standpoint, geographic capital, intellectual capital hubs are now at risk.
Well, since the title of the panel is the future of tokenization, let's take a couple minutes to think about the future of tokenization. So where do you see the big trends? Thank you. Where do you see the big trends for 2019 and moving forward? What are we going to see? More stable coins launching? What do you expect?
Yeah, possibly more stable coins launching. There's going to be a whole lot of play on the sort of trading front. But what I'm really looking forward to seeing, and some of the stuff that we're focused on, is one, there's going to be a lot more formal education, for instance, on blockchain at university levels. So, for instance, we just launched 2 weeks ago an education program in India where we're going to be training 2,500 students on pure blockchain coding skills, software engineers in the next 12 months. Over the next 2-3 years, that's going to be several thousand, right? And one of the drivers for this is, of course, the fact that all these companies that are getting funded, that are building on blockchain technologies, after they get funded, the first question they ask is, hey, this is the list of talent that I need to hire.
And it's not there.
Where am I going to find it, right? So that's a demand side pull. But I was stunned. We went to one university. It's a tier 2 university. Students are very much sort of middle class Indians, or even students from tier 3 cities. And I was expecting, I was going to talk to them, I was expecting that I'll have to explain, hey, this is blockchain and this is what we're doing. And we're having the discussion, and I could see just complete sort of bored looks. And then I just said, all right, guys, so you have some questions? And the very next question is, hey, what's the difference? Why this chain versus that chain? Or, hey, I've actually built a program on this protocol, and I'm considering using this protocol. And I said, let me get my CTO to talk to you guys. This is now beyond my depth of understanding, right? Now, that grassroots level innovation, that grassroots level interest at scale is what's going to drive a lot of that early stage innovation. At the same time, what I'm hoping to see this year is, I think on one panel, somebody mentioned yesterday, 2017 was POCs, then it was pilots. I'm genuinely hoping to see, along with some of the work that we're doing at EMURGO and Bloq is doing, to actually have corporations come out with genuine use cases that are now coming at scale, at some genuine sort of scale, right? That is important for us to show both on the developed, mature industry level.
Do you see any examples at an early level right now that provide a good example of that?
Well, I think some of the easy opportunities are, for example, in supply chain, for instance, right? There are several initiatives by large companies working on supply chain, or obviously the whole financial element, payments, or be it supply chain finance. There's a lot of work happening on sort of register of documents and identity validation and so on. So I'm looking forward to seeing this year a lot of that playing out and proving the value of blockchain technologies. Meanwhile, this robust push from the bottom up of young startups.
Gotcha.
And then that really makes this a lot more exciting space.
What do you see?
I think similar. I think some of the tracking and tracing, car registries, land registries, and these are all valiant, massive opportunities to get the flywheel started. But it also takes a lot of coordination of all the, whether it's land titles, that takes a lot of coordination. Supply chain, as Manmeet mentioned, a lot of coordination, even on something as simple as and it's not simple, of tracking and tracing a good from farmer to the grocery store. And so we're kind of in the middle of that. Everybody's watching to see what's happening, and you have these private networks, these intranets, extranets with some of these dynamics, and then let's be real here. A lot of the public networks, the throughput, transaction value, kind of utility of those has been ho-hum. And so we're also looking not only for kind of industrial use cases, but also public blockchain use cases to really crank that wheel.
Mm-hmm. Do you think JP Morgan coin provides a good example of a use case?
Fantastic training wheels, the way I look at it. It's the reality is tokenizing an internal back and forth of capital is fantastic. Again, the different form factors, different logic, and training and trying to change Fortune 500 companies is really hard. And so those are like baby steps in kind of the staircase of getting to where this industry needs to go.
We'll probably see more baby steps as we go into 2019 and moving forward. Any closing thoughts? We got 28 seconds on the clock. What do you think?
I can't find a better space to invest my time, energy. The tokenization, sometimes, again, with how the market behaves, people are like, Bitcoin's dead, 100 plus times, or these use cases with big, household names is not getting a bite. It takes time. I mean, this is like money factors take time to adopt and kind of build trust. And seeing the work that's been done over the last decade since the Satoshi white paper has been profound. And so I think the next decade is going to be very, life-changing for a lot of people.
Great.
I think at this stage, given that we're in such a sort of early stage of the entire development of the industry, what I would genuinely love to see is more initiatives like this that bring a lot of different blockchain players together to genuinely collaborate and grow the industry. We're so small. We don't need to be competing. We don't need I'm the best blockchain. No, I'm the best blockchain. Or I'm a JP coin or I'm an XRP. Frankly, who gives a shit? Right now, we need to grow the entire industry. We need to collaborate, prove the use case of the technology, and then once we're a multi-trillion-dollar industry, take the gloves off, punch each other in the nose. Doesn't matter.
The drama is
But not now.
fun for journalists, though, so I'll miss that.
That's why I passed on journalism career.
Well, thanks so much, everyone, for coming out so early. Appreciate it. That's nice.